Bismillahirrahmanirrahim. This is the second video on conversion investigation methods. And in this video, we will calculate the net worth of suspected fraud perpetrators and understand the effectiveness of these calculations in court and in eliciting confessions. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is a K. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So let us look into the first case. Given the following information, determine whether there is a likelihood of illegal income. If so, determine the amount of unknown income. So we have assets, we have liabilities, and then we have the income and the expenses, and let us see how we are going to work on it. Before we go into it, I would like to talk a little bit about the auto loan. Now, auto loans are typically not included in calculating the net worth because they represent a liability rather than an asset. Now, net worth is calculated by subtracting the liabilities such as debts, loans, and other financial obligations from assets such as cash, investments, real estate, and valuable possessions. Now, since an auto loan is money that you owe to a lender for the purchase of a vehicle, it is considered a liability. So, including the auto loan in the calculation of net worth would essentially double count the value of the vehicle. Now, once as an asset and again as a liability. You can see we have automobiles as well. Now, which could not accurately reflect our overall financial position. However, the value of the vehicle itself can be included in the assets when calculating the net worth, but it's important to subtract the outstanding balance of the auto loan to get an accurate representation of the net worth. So we have the assets as they are. We have the residence, same values over here. We have the baseball cards. We have the automobiles. We have the paintings. We have cash, and the total of this will be 171,000. And here this will be 307,000. And this will be 439,000. Okay. Now in the liabilities, we will not include the auto loan. So this is going to be 100,000. Obviously here it is 0, but here we have 30, but we will not count this 30,000, and this will be 50,000, and here the liabilities are 0. So the net worth is total assets minus total liabilities. So that is 71,000. This will be 307 minus 50, that is equal to 257,000. And this will be 439,000. So the changes in net worth now, it changes from 71 to 257. That makes a increase of 186,000. And in the year 3, there is from 257, it changes to 439. That is an increase of 439,000. To this, we are going to add the total expenses. The total expenses for year 2 is how much? This will be 30,800, and this will be also 30,800. So we will be adding these expenses 30,800 and 30,800. So the total income will be the changes in net worth plus total expenses, that is equal to 216,800, and this will be 212,800. From this, we are going to subtract the known income, and the known income here is 40,000. Salary and others, this is the known income, and this is 42,000. So we will be subtracting the known income, that is 40,000 and 42,000. So the unknown income will be the total income minus the known income, that is equal to 176,800 and 170,800. So we have determined the amount of unknown income. These are the unknown incomes, and obviously it seems that there might be illicit earnings given the undisclosed income of 176,800 in year 1 and 170,800 in 800 in the year 3. Okay. Now let us look into the next case. You are auditing a bank and someone provides you with an anonymous tip that an employee is embezzling money from the bank. You decide to investigate the allegation. Your interviews with other bank employees confirm that the suspected embezzler has been acting very strange lately. Some employees have seen the employee crying in the bathroom and acting strange in other ways. The bank recently downsized due to poor economic growth, yet the suspect recently bought a new Lexus. Based on some helpful hints from bank employees and through your own investigation, you discover that the mortgage taken out by the suspect 3 years ago for his personal home has recently been paid in full. After calculating the suspect's net worth, you determine that he has about 249,000 in income from unknown sources this year alone. So what are possible explanations for why the suspect is experiencing emotional changes and has an increase in unknown income? Can you conclude from these facts that the suspect has indeed been committing fraud? So the employee's behavior changes and increased unknown income could stem from various causes. While it is possible a family member death led to the income surge, fraud is also a possibility. Without more details, it is hard obviously to pinpoint the reasons. To investigate further, the investigator could create a vulnerability chart to connect different aspects of the suspected fraud. Checking public records like obituaries or wills might reveal if a close relative recently passed away. So, based solely on these facts, it's impossible to say the suspect committed fraud. Circumstantial evidence like the unknown income doesn't directly prove fraud. So, to convict for fraud, providing intent is crucial, while circumstantial evidence can help gather confession or further evidence, it's usually not enough. So, proof of fraud typically requires a confession, a clearly fraudulent document, or a pattern of similar fraudulent behavior indicating intent. So let us move on to the next case. You receive an anonymous tip that your controller is embezzling assets from your company. You begin your investigation by interviewing several employees in the accounting department who report no unusual behavior or sudden changes in the suspect's standard of living. One interviewee does report that the controller has gone on a number of extravagant vacations. You perform a net worth analysis based on a search of public records and finding the following. So we have a change in the net worth from 1000 to 3000 from year 2. There are living expenses, total income, and there is an unknown income of 2000 in year 2 and 3000 in year 3. So based on the evidence gathered in your search, what conclusions can you make about the controller? So obviously it's hard to reach clear conclusions from this analysis. The controller's co-workers haven't observed major changes in behavior or lifestyle except for a few lavish vacations. The net worth assessment showed a minimal estimate of unaccounted income. Uh, However, if the controller misappropriated funds for vacations, those expenses wouldn't be considered in the net worth calculations. Would you feel comfortable using the evidence above in an interview to obtain a confession? Why or why not? So, due to the uncertainty, it's unlikely an investigator would want to interview the controller yet. The controller should be able to explain the low unknown income in the net worth calculation. Interviewing them now could cause unnecessary embarrassment and even lead to a lawsuit for slander against the company. What additional investigation could you pursue to obtain more evidence? So an investigator could find out where, how often, and for how long the vacations took place. A travel agent could estimate the cost of these vacations with this information. More interviews could reveal the travel agency used by the controller or other spending habits. Once more details are known, another net worth analysis could be done. Let us move on to the next case. Bill James is being investigated for embezzling over 700,000 from ABC Capital Management, for whom Bill has worked for nearly 10 years. When co-workers noticed the new toys Bill was buying, they jokingly asked him to tell them his stock picks as they wanted in too. Bill told them that they better adopt some rich relatives. My uncle Eddie didn't have any kids, so he left a chunk of his money to each of his nephews. Explain how you might go about checking the validity of Bill's claims to a recent inheritance. Include in your discussion the relevant information you need about Uncle Eddie and where you could find that information. So, to assess Uncle Eddie's will, which becomes public after his death through the probate process, one can visit the county court's house. The will typically contains details about beneficiaries and bequests. The main challenge lies in identifying Uncle Eddie's full name as well as the state and county of his residence. This information could be obtained by interviewing known relatives of Bill or by searching genealogical databases, gynecological databases. Additionally, conducting a search for death notices or obituaries in databases like LexisNexis or National Automated Accounting Research System might provide clues. Personal records of the company might also reveal information about Bill's parents. If Eddie was a maternal uncle, Bill's parents' marriage license could disclose his mother's maiden name, like Eddie's last name. Lastly, Bill asserts that all of Eddie's nephews received a share of the inheritance, so investigating if Bill's brothers' lifestyles have similarly changed drastically could provide further insight. Okay. You manage a car dealership in a large city. Many of your sales employees are very successful and have purchased their own vehicles from your dealership. Your dealership finances the sale of some of these vehicles. One employee recently paid off the balances on a couple of new vehicles purchased from your dealership. You discover this information after investigating complaints from customers about this particular employee's actions. His sales are down and customer complaints about his attitude abound. He previously worked for two other car dealers, both of which were satisfied with his performance. This employee is in charge of having used cars reconditioned by various automobile repair shops. So, what signs of unusual behavior and lifestyle symptoms are present in this case? What are some possible causes for them? Now, in this case, unusual behaviors and lifestyle indicators include reduced sales activity, rapid repayment of multiple loans despite lower sales outcomes, and inadequate treatment of customers. Stress resulting from attempting to conceal fraudulent actions may contribute to the mistreatment of customers. Alternatively, these behavioral changes could stem from unrelated personal crises. How might this employee be defrauding the company? Now, this employee might be getting kickbacks from auto repair shops. They could also be fabricating sales records to boost their personal commissions or simply taking parts or supplies from the dealership. Okay. Janet Moody is one of the XYZ company's most trusted employees. She never complains about her work and rarely misses work due to illness or vacation. The company has been successful over the years but is now having cash flow problems. Because of the recent downturn in the company, you take a closer look at all the company's financial records. When you ask Janet about the recent cash flow problems, she responds, I don't know what is going on. I only do the reporting. Are those um, Ask those who manage the company. This behavior differs from Janet's normal pleasant deportment. As you continue your investigation, you discover that the reported financial results do not match what the company is doing, but you can't determine why. You decide to investigate Janet further. What are some behavior and lifestyle changes that you should look for? Now, search for shifts in spending habits, alterations in banking connections, or trends and adjustments in lifestyles. Additionally, observe any changes in Janet's demeanor. Lastly, calculate Janet's net worth and investigate for potential undisclosed income sources. Okay. What resources can you use to conduct your research? Now, the internet and public databases offer numerous useful tools for assessing credit histories and even banking records. Additionally, you can request or subpoena Janet's financial data from her bank or other relevant sources. Utilizing the net worth approach will aid in determining if Janet is exceeding her financial capabilities. Okay. Now, using the net worth method, analyze the following financial data for potential signs of fraud or embezzlement. So, once again, we have assets, liabilities, income, expenses. Do your results indicate that this person could be committing some type of fraud? If so, then why or why not? What other factors might you consider to determine whether fraud has been committed other than the financial total income from other sources, if any? Is this scenario realistic? So, first of all, this individual might be engaging in fraudulent activity. The significant income from unknown sources will reflect that, and let us see how to do that. So, first of all, we have the assets. We have the same for the residence, automobile, stock, and cash, and the total for this will be how much? 340,000, 341,500. This will be 468,150, 469,965, and then 511,962. Okay. Then we have the liabilities. We have the mortgage balances and the auto loan balance. So so this makes 215, 70,000, 160,000, 132,000, and 50,000. So the net worth is total assets minus total liabilities. That will be equal to 125,000. This will be 271,500, 308, 150, 337,965, 461,962. Okay. Now from this we can look into the changes from year 1 to year 2. The changes of 146,500. Year 2 to year 3, it is how much? 36,650. Then this is 29,815, and this is 123,997. So this is the change in net worth for a period of 5 years. And to this we are going to add the total expenses, and we have 49,000. This is 61,000, 64,300, and 79,30. So we will be adding these 49,000, 61,000, 64,300, and 79,30. So the total is how much? 146. This will be how much? 195,500, 97,650, 94,115, and 194,927. From this we are going to subtract the known income, and the known income is 110,000, 117,000, 135,000, and 143,750. So from the known income is 110,000, 117,000, 135,000, and 143,750. So once we subtract, this will be equal to 85,500. This will be negative 19,350, negative 40,885, and 51,177. So we can see that the significant income from unknown sources in year number 2, this raises suspicious, despite the subsequent years almost offsetting its effect. Additionally, the reappearance of income from unknown sources in year number 5 suggests a possible return to fraudulent behavior. One interpretation could be that in year 2, a substantial fraud was committed, followed by a period of waiting to assess the situation. Alternatively, the stolen funds from year 2 might have been spent on untraceable assets in year number 3 and 4. The resurgence of unknown income in year number 5 hints at a potential recurrence of fraudulent activities. Okay. Uh, Second, what are other factors might you consider to determine whether fraud has been committed other than the final total income from other sources, if any? So there may be several other factors what that need considerations, like peculiar trends in their individual assets and liability accounts merit further investigation. Secondly, analyzing data from multiple consecutive years offers a more comprehensive understanding of the situation. Okay, then is this situation realistic? Likely not. Most evidence indicates that fraudsters tend to persist in their fraudulent activities without significant breaks, and over time, their fraudulent behavior typically escalates in both amount and frequency, which is not prevalent here. It may be unrealistic to expect a data pattern where fraud was possibly committed in 1 year and then not repeated for several years. Okay, let us move on to the next exercise. The following financial data was collected and without calculating the amount of unknown income indicate possible red flags or trends you notice in the numbers above. So if we look into these numbers, there seems to be a warning sign in the financial data. As you can see that this individual acquired cars, boats and stocks while also reducing their mortgage, auto and other auto loan, mortgage and auto loan, you can see. So so these are the what we can see, the possible red flags over here. Then let us now calculate the amount of income and unknown income using the numbers given. Does it appear that a possible fraud exists? Could there be another explanations for the unknown income? So for this, let us calculate the net worth. Now we have the assets as it was given over here. We have the assets, and the total of these assets will be how much? 314,500, 378,000 and 372,000. Then we have the total liabilities, and that is 212,000, 228,000 and 100,000. So the net worth, once again, total assets minus total liabilities, that is 102,500, 150,000 and 272,000. So there is an increase in net worth. You can see there is an increase by 47,500 in the second year, and for third year you can see 122,000. Let us look into the expenses. The expenses are how much? 43,000, 47,000, 47,000. So we will be adding the expenses, that is 47,000 and 47,000. We will add this up and this will give us a total income, and the total income will be 94,500 and 169,000. Then we to this we look into the known income, and the known income is how much? Known income is 55,800 and 90,800 and 13800. So the total income is we have already calculated, and the known income is 90,800 and 90,800 and 130,800. So we will subtract this amount to determine the unknown income, and the unknown income is 3,700 in the second year, but it substantially increases to 38,200. So there is a potential of fraud in year 2 and year 3, but it is important to avoid jumping to conclusions too quickly. It's conceivable that the individual received unreported inheritances, earned money from gambling or other activities, or received income from other undisclosed sources. Okay. Mr. I.M. Besley works in the purchasing department for Big Time Incorporation. During the 12 years that he has worked there, he has been a trusted employee and has sole responsibility for the company's purchasing function. He started working for the company in 1990 for 30,000 a year and now makes 100,000 a year. Fellow employees and friends have noticed that his lifestyle has improved substantially since his recent promotion to purchasing manager. Based on an anonymous tip, the CEO asked you to look into the situation. What steps would you take to investigate the possibility of fraud here? Now, to investigate potential fraud at Big Time Incorporation, several approaches can be considered. Firstly, review invoices from companies with increased purchases. Then utilize publicly available database to verify the legitimacy of all suppliers, focusing on those with suspicious invoices or heightened sales in recent years. This search aims to uncover any fictitious suppliers. If fictitious companies are found, examine the financial records of Mr. Besley, who is solely responsible for purchasing decisions, by contacting banks or obtaining a subpoena. Additionally, conduct interviews with unsuccessful vendors, previous employers, and Mr. Bezel himself to gather information about his sources of income, lifestyle, and other pertinent factors. Okay. Let us move on to the next exercise. Now Tom works for XYZ company and is suspected for embezzling funds from the company. By searching databases on the internet, talking with his ex-wife, and searching through his trash, you gather the following information. Now use this data to figure out Tom's income from unknown sources by performing a net worth calculation. So we have the assets, we have the liabilities. So assets minus liabilities will give us a net worth of 50,000. Now the prior year's net worth was 10,000. So we will be subtracting this 10,000. So the balance is 40,000. Then there are living expenses of 50,000. We will add this. So the total income is going to be 90,000. And the known income is 60,000. We will subtract this. So the unknown income is 30,000. So to conduct, how can this information be used to motivate Tom to confess that he has stolen from XYZ company? Now, to conduct an effective interview, the interviewer would initially request Tom to provide a comprehensive list of all his sources and amounts of income without disclosing the purpose behind the questions. Once all sources of income are established and compared to the known 60,000 income, the investigator can gradually reveal information about the 30,000 of unknown income to Tom. Confronted with this unexplained aspect, Tom might be compelled to confess. Okay. Let us move on to the next case. Now, Sarah Welch was hired 15 years ago by Produce R Us, an importer of rare and exotic fruits. Produce R Us was started by an immigrant family 20 years ago and has grown to a national company with sales of 10 million annually. Although the business has grown, the family owned business strives to maintain a family atmosphere and stresses trust. Because of Sarah's honesty and hard work, the manager quickly promoted her and she now signs checks for amounts under 5,000 and also has responsibilities for accounts payable. Now, however, the owners are suspicious of Sarah's recent lifestyle changes and have hired you to determine whether Sarah is embezzling from the company. Public records reveal the following information. Perform a net worth calculation using the data above. Ignore the interest as such. Okay. So once again we have the assets, and the total of these assets is 175,000. Year 1 to 25,000 in year 2 and 300,000 in year 3. Now we have the liabilities, and the total is 100,000 and 45,000. Then we have the income. Income is 41, 44 and 46. Now we have the total expenses of 23,000, 23,500 and 28,500. So the net worth is total assets minus total liabilities, that is 75,000, 180,000 and 300,000. Then we will look into the changes. Now changes in the net worth is 105,000 to 120,000. To this we are going to add the total expenses, and the expenses are 23,500 and 28,500. So the total is 128,500 and 148,500. So from this we are going to subtract the known income, and the known income is 44 and 46. So we will subtract 44,000 and 46,000, and that gives us 84,500 and 102,500. So the income from unknown sources is 84,000 in the second year and 102,500 in the third year. Okay, let us move on to the next case. After searching public records and other sources, you accumulate the following information for John Doe. Given the number financial information, determine whether there is a likelihood of fraudulent income. If so, determine the amount. So once again we have the assets, and the total of these assets is 189,500, 261,500 and 395,000. Then we have mortgage balances, and these mortgage balances are the total liabilities are 96,000 and 102,000 and 105,000. So the net worth, once again, total assets minus total liabilities, that makes 93,500, 159,500 and 290,000. So the changes in net worth is 66,000 and 130,500. To this, once again we are going to add the total expenses, and the total expenses here will be 46,500 and 68,000. So the 46,500 and 68,000. So the total will be 112,500 and 198,500. From this we are going to subtract the known income, and the known income is 54,000 and 62,000. So we will subtract this amount known income, that is 54,000 and 62,000. So the income from unknown sources is 58,500 and 136,500. So obviously, if you can see, there is a suspicion. There is a suspicion of potential fraudulent income with calculated amount of 58,500 and 136,500. Definitely. Okay, man. Let us look into the next case. A bank manager's responsibility was making loans. Auditors discovered that several loans he made over a 5 year period has not been repaid. A fraud investigation revealed that the manager has been receiving kickbacks from risky clients in exchange for extending them loans. His loans had cost the bank millions of dollars in uncollectible loans. You have been asked to determine the amount of kickbacks your loan officer has taken. What type of records would you search to find information about the manager's assets? So, you would likely collect data regarding the manager's fluctuations in net worth, living expenses, and income to conduct a net worth assessment. Now, this involves scrutinizing public records, bank statements if accessible, credit bureau reports, real estate transactions, and any other relevant records revealing expenditure patterns. Then which record would be most helpful in this case and why? So I believe that the most valuable record for conducting a net worth calculation would be those that offer evidence of expenditures, encompassing any documentation that sheds light on financial transactions. Okay, man. Let's move on to the next case. Mark is a young business student at the University of Georgia who works part time as a financial advisor at a local credit union. Mark has been married a little over 2 years. Mark's wife is currently taking care of the newborn son. While Mark finishes up school, Mark is well liked by all those who know him. In fact, those who know Mark would describe him as outgoing, funny, and very intelligent. At the credit union, Mark's primary responsibilities are to set up new accounts, make initial loan interviews, and work as a teller. While at work, Mark always appears to be working hard and rarely misses work even for vacations. Oftentimes, Mark is the first one to volunteer to stay late and look over accounts for help clean up. Over the last 4 months, Mark's credit union supervisor has noticed that Mark has been making some interesting purchases. 4 months ago, Mark purchased a big screen TV and has frequently invited other co workers to watch movies at his home. 1 month ago, Mark bought 3 new wool suits, which he frequently wears to work. 2 months ago, Mark traded in his old Geo Prism for a new Jeep Grand Cherokee with many expensive features. When asked where he was getting the money for these purchases, Mark humorously responded, I guess people are right, when you die, you can't take it all with you. However, it sure was nice they left it with me. This was an allusion to the fact that the wealthy grandmother has recently passed away and left Mark, her favorite grandson, a significant inheritance. Also, the supervisor has recently heard some of the new customers complaining that their balances are off by 20, 30, and even $50. So, what fraud symptoms are present in this scenario? So, obviously, two glaring signs of potential fraud include marked significant rise in living standards over the past 4 months and complaints from new customers about discrepancies in their balances ranging from 20 to 50. So, is it possible to know from the information about the mark is committing fraud at the credit union? Now, from the provided information, it's not conclusive that Mark is engaging in fraud. What is evident, however, is his elevated standard of living and the complaints from new customers regarding discrepancies in their accounts. Regardless of the circumstances, the account discrepancies amount among new customers are a clear red flag that warrants investigation. Okay. What is one reasonable action that the supervisor could do if he or she suspected Mark as a fraud suspect? Now, if the supervisor suspects Mark of fraud, reasonable investigative steps could include establishing if the customer's reporting balance discrepancies had interactions with Mark, conducting a net worth assessment to gauge undisclosed income, auditing Mark's account balances from the past 4 years, if feasible, conducting a background check to verify the reporting passing of Mark's grandmother. Okay. Now, assuming that the credit union decides to investigate further, calculate Mark's net worth and income from other sources. Okay. So, this section number 4 is explained on the next slide, and we will go through the same process. So we calculate the total assets, and the value is 9,100, 56,300, and 58,000. The liabilities are 0, 45,000 and 45,000. So once again the net worth, total assets minus total liabilities, 9,100, 11,300 and 13,000. Now the changes in the net worth is 11,300 minus 9,100, that is 2,200, and here it is 1,700. To this we are going to add the expenses, and we can see that the total expenses are how much? 1230, 2130 and 2230. So the total expenses are how much? 2130 and 2230. So when we add these two together, the total income is 4330 and 3930. From this we are going to subtract the known income, and the known income will be here. Maybe we can put it here also. 1300, 1300 and 1300. So we will subtract the known income, that is 1300 and 1300. So when we subtract, the income from unknown income is 3030 and 2630. Okay, boy. Let us move on to the next exercise. Now use the following financial data to prepare a comparative net worth assessment. Okay, we have year number 1 and year number 2. We go through the same process. We make the total. Total is 80,000 for the assets. Year 1, 83,000 for year 2 and 270,000 for year 3. And then we have the total for the liabilities, that is 58,000 and 43,000, and this is 0. So the net worth is 22,000, total assets minus total liabilities 40,000 and 270,000. Then we look into the change in the net worth. Here it is 18,000 and here it is 230,000. To this we are going to add up the total expenses. So the total living expenses are how much? 15, 20, 20, 22,000, 26,000 and 23,000. We have, it is already given to us 22,000, 26,000 and 23,000. So this makes 26,000. Here it is 23,000. So the total income, we will simply add up the two, that is 36,000 and 41,000. From this, we are going to subtract the known income, and the known income is 30, 36, and 41. So 36,000 and 41,000. So the the total income, will be here 44,000. And this will be 253,000. So from this, we are going to subtract the known income, that is 36,000 and 41,000. So the income from unknown sources is going to be 8,000 here, 44 minus 36, and 253 minus 41 is 212,000. Okay, let us move on to the next exercise. Steve Slick Willie, age 45, just got out of jail as a reformed citizen on parole. Slick decides to go into business for himself. He starts a collections company to help companies collect debts. The terms of his parole stipulate that he pay restitution payment to the federal government of 400 a month or 10% of his income, whichever is greater. As his parole officer, you notice that after a year out of jail, Slick makes some interesting purchases. First, he buys a new Jaguar, which he drives to payroll meetings. Second, he moves to an expensive neighborhood on the north side of town and takes a cruise to Jamaica with his 19-year-old girlfriend. Yet, he has never been late making his 400 monthly payments to the federal government. After obtaining a subpoena for his bank records, you notice that he has only 1,000 in his account. About this time, you receive a call from a man who is making payments to Slick's collection company. He states that Slick is threatening to break his legs and hurt his family if he doesn't pay Slick's company. The man says Slick demands the check he made out to a woman, not a company. This complaint convinces you to investigate Mr. Willie and his girlfriend. A search of UCC filings in the country shows that Slick's girlfriend owned 3 cars, costing a total of 90,000, and a 250,000 house, and a company called Take It From You. You check her bank account and see that more than 50,000 is moving through the account each month. You decide to dig through Slick and his girlfriend trash a few times each year. In these searches, you find evidences that support the following: 3 car payments totaling 1,000 per month, a 1,500 monthly mortgage payment, a credit card balance of 6,000 with 100 monthly payment, a balance of 12,000 owed to Home Shopping Network with 500 monthly payments, 400 food payments during the past 2 weeks, and 3,500 payment to Jamaican cruise. After searching the girl's friend's trash, you talk to her neighbor, friends, and co-workers and determine that she and Slick spend between 1,500 and 2,000 a month on miscellaneous items. We will take 1,500 in this case, and trips. One neighbor tells you that Slick has just gave his girlfriend a diamond ring that cost 3,000. Slick girlfriend works as a waitress at a small restaurant and makes only 15,000 a year. Note: assume that both Slick and his girlfriend's net worth last year were zero. Use this information to prepare a net worth analysis of Slick's girlfriend. Ignore interest in your calculations. Okay. So we will first, let me clean up this sheet to make it easy. Okay. So first of all, let us look into the assets. The assets are, as you can see, there is a house for 250,000. Then there are cars for 90,000. and then there is furniture. Uh, 3 car payment, mortgage payment, a credit card balance, a balance of 12,000 home to home shopping HSN 12,000. So the total is 352,000. These are the total assets. Now let us look into the liabilities, and we look into the, now you see we have 250,000. We have 250,000 and the monthly installment is 15,000. So 15,000 times 12, that is equal to 18,000. So 250 minus 18 is equal to 232,000. Now the cars is for 90,000 and the installment is 1,000, that is 12,000. So 90,000 times 12 minus 12, that will make it 78,000. Then there is a home shopping loan of 6,000. So that is equal to 316,000. So the net worth, total assets minus total liabilities, that is equal to 36,000. Let us look into the expenses. We can see that there is a credit card with 100 monthly payment. That means for 1 year this is going to be 1,200. Then for food, 400 during the past 2 months of past 2 weeks. So 800 for 1 month. So 800. This for 1 month it is 800 into 12, that is 9,600. Then he has paid for the cruise 3,500. Miscellaneous is 1,500, and then there is a ring for 3,000. So the total expenses are 35,300. So the total income will be the net worth plus the total expenses, that is 71,300. From this, we are going to subtract the known income of 15,000. So the unknown income is of 56,300, and this is what they are suspecting. So you can see that car and house payments are not included as expenses because the purchase of the house and cars are included above as the assets. Let us move on to the next exercise. Homegrown Gardens LLP is a 10 million nursery and garden retailer in Florida. Homeground. Okay, please ignore, this is an overlap, and we will continue with this exercise. Homegrown employ about 20 full-time and seasonal employees. The majority of the plant and nursery stocks that homegrown sells comes from Monromeo Nurseries, a wholesaler based in Alabama. Monromeo is recognized throughout the South for the quality of the plants it grows and sells. Homegrown is generally happy to pay the premium price that Monromeo's plants command because it passes the extra cost on to its customers who value the high quality plants it sells. However, Barry Greenstem, one of the homegrown's managing partners, is visibly upset after speaking with the owners of other nurseries at a recent trade show in Atlanta. Although Monromeo has increased its prices across the board, Monromeo's price hike to homegrown is larger than the average. Barry's suspect that Betty Stevenson, homegrown's assistant manager in charge of purchasing nursery stock, may be accepting kickbacks from Monromeo in return for allowing higher purchase prices. Betty and her husband Mike purchased a new SUV, a houseboat, and several ATVs last year and moved into a new, larger house this year. Barry knows that Betty's salary isn't high enough to support the new lifestyle, and he doubts that Mike's job as a city employee would provide large enough raises to justify the new toys. Barry hires you to perform the net worth investigation of Betty and Mike to determine the amount of any unknown income. Your search of public and private records reveal the following information. So, using this information, calculate the amount of income from unknown sources, if any, using the net worth method. Ignore interest in your calculation. So, this is what the search has provided, and we will try to calculate the net worth. So once again we have the assets and we make the total of the assets, that is 85,000, and then we have 157,000 and 287,000. The total liabilities are 37,500, 45,500 and 111,000. Now the net worth is total assets minus total liabilities, that is 47,500, 111,500, 176,000. So the changes in the net worth is 64,000 and 64,500. To this we are going to add the expenses, and the total of the expenses are 925,700 and 30,400. So the total is 89,700 and 94,900. So from this we are going to subtract the known income, 61,500 and 63,000. So the income from unknown sources we simply subtract is 28,200 and 31,900. So this completes the second video on conversion investigation methods. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.